Have you ever noticed that every time the economy shakes, every time markets panic, every time a crisis hits, the same comforting sentence suddenly appears everywhere like a magic spell repeated by investors, influencers, and financial advisors? Don't worry, the stock market always goes up. But pause for a moment. If that were true, why did countless people lose their life savings in 1929? Why did millions watch their retirement collapse in 2000? Why did entire fortunes evaporate in 2008? Why did so many people who bought at the peak spend 10, 12, even 15 years just trying to get back to zero? If the market always goes up, why are there decades where it doesn't? If the market always goes up, why are millions of investors still stuck holding assets that never recovered? Why are you still worried? There is a silence here. A secret. A contradiction people feel in their gut but are too afraid to say out loud. Because deep down you already know something isn't right with the story you were sold. You've seen charts moving upward, but you've also seen crashes so violent they rewrote economies. You've heard advisors say, stay calm, think long-term, even when long-term meant watching your portfolio bleed for years. And here is the part no one ever dares to say in the first 15 seconds of a financial video. The stock market does not always go up. It only goes up if you survive long enough. And most people don't. Most people get wiped out before the rebound. Most people panic before the recovery. Most people exit right before the miracle. The ones who tell you the market always goes up are the ones who never show you the graves of those who didn't make it. And today, we're going to dig them up. Because if you want to understand what really happens beneath the beautiful upward sloping line in every investing brochure, you have to rewind history to the moments when that line broke. When it froze. When it reversed. When it betrayed everyone who trusted it. Welcome to the Economic Rewind Vault. And before we open this vault, if you're here because you're done being comforted with half-truths, consider subscribing so you don't miss the episodes that reveal the parts of the financial system no one wants to explain. Now hold your breath, because the deeper we go, the more this illusion unravels. The seductive belief that the stock market always goes up didn't come from data. It came from charts, beautiful, zoomed-out charts that hide the suffering inside them. Look at a 100-year graph and everything seems smooth and inevitable, a gentle upward march toward prosperity. But zoom in and the truth becomes violent. Take 1929. The Roaring Twenties had convinced the world that markets were invincible. Stocks only go up, they said. Then came a crash so deep that the market took 25 years to recover. One entire generation lost. People who bought near the top waited until 1954, just to break even, and only if they held through the Great Depression, without selling, which almost no one did. Did the market go up? Yes. Did the people go up with it? No. Now look at Japan. In 1989, the Japanese stock market was unstoppable. Experts said Japan would own the future. Then the bubble burst, and here's the twist. 35 years later, the market still hasn't returned to its peak. A lifetime gone. Savings frozen in time. Next, go to the year 2000. The tech bubble promised glory, wealth, destiny. People poured their hearts and savings into companies that produced dreams instead of profits. Then came the collapse. The Nasdaq lost almost 80% of its value. It took 15 years to recover. Countless companies never returned. Countless investors never recovered emotionally. Then 2008, a global financial earthquake. A collapse engineered by leverage, greed, complexity, and the illusion that risk had been conquered. The market crashed more than 50%. Millions lost homes, jobs, pensions. And yet once again, after a long, painful rebuilding, the charts went back up, but the people inside them? Their lives didn't slope upward as neatly. The truth is this: the market always goes up only if you have the time, the capital, the psychology, and the stability to hold through chaos. And for most people, those conditions do not exist. Because what kills investors isn't the market, it's fear. It's timing, it's leverage. It's losing a job during a crash and needing to sell at the worst possible moment. It's watching red numbers for so long that your brain chooses relief over logic. It's believing the illusion of invincibility right before the collapse. And this leads to a darker truth that almost no financial educator will admit. The stock market's long-term upward trend is built on the suffering, panic selling, and wiped-out savings of the people who couldn't stay in it. The winners are subsidized by the losers. Patience is financed by fear. Wealth climbs on top of the mistakes of others. This is the part of the story no chart shows you. When people say the market always goes up, they are not describing reality. They are describing survivorship bias. They are showing you the survivors, not the casualties. But here's the twist that changes everything. The stock market can be an extraordinary wealth engine, but only once you stop romanticizing it. Only when you understand that the upward line is not a promise, but a battlefield. Only when you accept that you will face storms, crashes, corrections, recessions, manipulations, algorithmic whirlpools, geopolitical shocks, and panics that will test your psychological limits. Only when you understand that the market rewards the prepared and destroys the hopeful. And only when you understand that the phrase, "the stock market always goes up," was never meant to comfort you. It was meant to keep you invested. If this episode cracked open one of the most seductive illusions in modern finance, consider subscribing to the Economic Rewind Vault, because in the next episodes, we are going deeper, darker, and sharper than ever before. In the next episode, we are going to confront a myth even more dangerous than this one. Retirement is guaranteed if you save and invest steadily. But the truth about pensions, demographic collapse, shrinking labor pools, and the math of compounding will shake everything you've been taught. You won't want to miss it.